me?
I can hear you clearly.
All right. Thank you, Antonia. Good morning, everyone. It's a pleasure to be a part of this forum today. My name is Stuart Mulaabi. I work as a tax manager in Deloitte Uganda Limited. Deloitte Uganda Limited is a professional services firm. We offer tax advisory and also consulting, which includes, among other things, financial services advisory, valuations, bookkeeping, among others. So it's a pleasure to be here. I look forward to having discussions with everyone on this forum. Feel free to ask as many questions as possible. I always tell people that whenever I get a chance to present, it's more of a discussion as opposed to a presentation. Obviously, I think Antonia has mentioned that we shall have a Q&A session. So even if I'm saying that we have as many questions as possible, we should try and have them after the discussion, and then we can have, we can take it from there. So just to kickstart things, I was informed that the week prior, the team here had an overall discussion on the tax amendments at a high level. So my job is basically to then focus on those key aspects that will impact SMEs, navigating the same, and also the practical implications of some of these amendments. Now, if I just talk about the budget that was recently read, one of the key highlights that the Minister of Finance talked about was the fact that they are looking at expanding the economy tenfold. That is expanding the economy twice every 5 years. Now, that kind of move or that kind of measure comes with, among other things, widening taxpayer base, increasing credit facilities to a number of businesses that they can expand, and also just mobilizing the economy in the right direction. Now, part of that same budget, a number of measures were provided for SMEs. And I remember one of them was to do with recapitalizing the Uganda Development Bank to increase credit facilities for SMEs. There was also something to do with the Emioga facilities being brought near SMEs, and among other things. But like I said, this particular discussion is centered around what are the key measures from a tax perspective that SMEs should be focusing on, and how we shall apply them and navigate them as we move forward. So if we are to start, I'll kickstart things with the income tax. Now, as an SME, the default tax that everyone has to pay is income tax. What do I mean? Income tax is divided into two brackets. We have the corporate tax and the employment taxes. Now, as an SME, even if you are a one-person company, at some point you would have to pay income tax. So one of the key measures that were introduced this year was to provide for an income tax exemption for SMEs whose capital is not greater than 500 million Ghana shillings. Now, a number of things to consider here. This measure is directly linked into what the government is trying to do, that is expanding the taxpayer base. With expanding the taxpayer base, that means the economy is expanded, and also the Uganda Revenue Authority is able to collect more revenue. Now, one will wonder, how can it be that the government is introducing an exemption, but that exemption is considered as a way of the URA expanding their collection? I'll explain a few ways that can be considered. Now, this is an incentive for people to register businesses, okay? Now, when you register a business, You will think, but because you have an income tax exemption, you won't think about other taxes you have to remit as a business. Now, income tax is just one of the few taxes. You have VAT, you have excise, you have stamp duty, import duty, among so many other taxes. Now, if you look at what the law says is that this particular provision is effective 1st July 2025. Now, that means that ideally, obviously, this is more of a practical implication, but ideally, what that would mean is that it would be applicable to businesses who have registered after 1st July 25. Like I said, right now it's more of a practical assumption, but we shall look at what you are in practice. We'll consider as the effective commencement date. Why am I saying that? From a legal perspective, whenever an amendment is made in the law, okay, it's only considered prospective. It doesn't apply retrospectively. That means that if the law has provided that as at beginning 1st July, businesses whose investment capital is less than that particular threshold which they have given, ideally it would be that it would only apply to those businesses who have been incorporated after 1st July and not the one which have been there before. So that's something for us to think about and let it sink in, because from a practice point of view, there could be some pulling and pushing. Now, the other thing to consider is that this particular exemption applies to citizens. Now, again, from the tax point of view, a citizen, that term is wider than what we assume it to be. From a tax perspective, a citizen means a person who is a Ugandan citizen and a citizen of any of the East African countries. Those are the countries who are deemed to be in the EAC. So it's not just for Uganda, but it's just for the citizens who fall in that category of the ESC citizens. Now, I've just talked about the term that it's for first-time applicants, and that also what it does mean that if you have enjoyed this exemption for the first 3 years after applying, you won't have another 3 years again to get the same exemption. So meaning it's a one-off 3-year exemption and it's not a recurring exemption. Once you get it and you enjoy it, you've had it. So you can't go back and again claim the same thing for another 3 years going on like that. In general, one thing that we've seen this year is that most of the amendments have tried to cap all the exemptions subject to fulfilling a number of compliance measures. What do I mean? In my practice and also in my experience and also what we've seen from the URA, there are so many companies who receive exemptions but do not comply with some of the requirements for those exemptions. So what the Ministry of Finance has said in this year, even the TPC, they have said that the Tax Procedures Code Act, they have provided that in case someone has received an exemption, but you do not comply with the requirements for that exemptions, what are some of the requirements? I'm talking about things such as filing tax returns, filing on time, all those things. So if you don't comply, you stand at a risk of losing that exemption. Now, there's a common misconception that because someone has exempt income, they do not have to file a return. That's why I said it's a misconception, because from a legal perspective, from a legal framework, even if you have an exemption, you ought to declare your revenue in a tax return every year as per the required deadline if you're operating on a given financial year of income, that is either Jan to December or July to June given. So because you have an exemption, it doesn't necessarily mean that you escape or you are exempted from filing a tax return. I hope that is something that is now clear. The other thing that I want us to focus on, and why I'm focusing on this much, is because it may be applicable to some of us here and also a number of prospective entrepreneurs who are looking at incorporating new businesses. Now, I have drawn up two scenarios here. Before I go there, I've drawn up two scenarios whereby in one, a business has applied for an exemption and they have gotten it. And in the second scenario, the business doesn't have the exemption. Where am I saying that? When when a business has exempt income, okay, it does mean that you do not subscribe to carried forward losses. What is a carried forward loss? A carried forward loss basically means in any year of income, if you have expenditure that's exceeding, if you have tax allowable expenditure that's exceeding your income, it means that any loss in that year of income can be carried forward to the next year of income. Now, the catch point is that in case you get the exemption, you do not qualify to carry forward the carry forward loss after the period of the 3-year exemption. Now, I want to show you what that means from an accounting perspective. Obviously, I've used logical figures, but they aren't actual figures, but it's going to help us to understand what I'm trying to drive at. So in this first example, you will see that this particular person has exempt income, so the 10 million, 30 million, 60 is all considered as exempt, so meaning they have no tax payable. Now, ideally, when you file the return and you put in that income under exempt, that return will give you that you have chargeable, that you have a tax loss, ideally. However, like I said, from a legal perspective, in the 4th year after the end of your exemption period, you may not be permitted or you cannot carry forward that loss into the 4th year. Now, I want us to then look forward at the next scenario whereby someone does not apply for the exemption. You will find that this person can carry forward their losses, and then in the 4th year, they can then carry forward that loss, which will adjust their tax payable. Now, why am I saying this? It's a proven fact that most SMEs take some time to break even. In most cases, 3 years, 5 years, depending. So the assumption is that before you break even, you will be having tax losses, okay, which can help you to reduce your tax bill when you've finally broken even and now you have a tax payable. Now, most people have been looking at this from the positive side of it, which is good, by the way. Yes, we're getting exemptions, but we have to look at the deeper implications and deeper perspective. It's no secret that for the past number of years, there have been a number of legislative amendments aimed at capping the number of years that a loss can be claimed. I think it's now 8 years. So this in itself is both an incentive, but also a way of reducing the number of taxpayers who can claim carry forward losses through making it an incentive, but also reducing the taxpayers who can claim carry forward losses. So all in all, I think this is a very good measure for SMEs and the Ugandan business at large. But just to keep in mind that it does come with implications as how I've showed you. So from an income tax perspective, that was the main, I would say, amendment that does impact SMEs. I think you would have gone through the others, which may not necessarily impact your businesses in the previous discussion. Now, from a VAT perspective, there is also another one. There is another one which was introduced, and that is to do with anti-fragmentation when you're importing goods. Now, it's a common business practice that how a person, say, who is trading, maybe Chikubo, how they operate. You could find that in a space of 2 months, you have about so you've gone to China and you've bought goods which can fit in a 1x40 container. But at the time of shipment, you bring in those goods in a phased manner. Say in a space of 1 week or space of 2 weeks or even a month, you bring in about 5 consignments or 5 shipments of that overall consignment that you had, which can fit in a 1x40 container. So because of that, what happens is that you're bringing in your consignments in installments. Maybe the first one has about 1,000 kg of material, like that up until the whole shipment is exhausted. Now, what does this amendment mean? This amendment provides as follows. If you are a person who is bringing in a number of consignments, but if those consignments, when aggregated together, okay, they put you in a threshold for VAT registration, ideally, you will be required to register for VAT. What is the reasoning or rationale behind this? Now, in classical economics or in a classic trade terminology, we have something called canons of trade. Canons of trade is basically the principles or features which indicate that someone is trading. Now, if you're a person who is engaging in a transaction more than once, okay, more than once or twice or thrice, depending on the number depending on what you're doing, you will be assumed to be in business. Now, why is that key for us to consider for this particular amendment? If you're a person who has bought in a consignment in 5, 6 times, it will be assumed that actually you're bringing in that the number of transactions you are conducting, you are conducting them because you are looking at conducting business. Ideally, if you're a non-business person, you will go and buy your things once and you won't do it again. But if you're a trader, you're going to be doing that same transaction over and over and over again. So the number of transactions that you're doing will basically classify you as a business person, and by virtue of you being a business person, you are able to be assumed that you are trading. And because you are trading, they will then look at the value of your imports, and then they'll ascertain that if you're importing, say for example, in a space of 3 months or 4 months, you bought in cargo worth, say, let me say a quarter of $1 million. Ideally, you're bringing in that cargo to sell it. Okay, so from again basic economics, they'll get your purchases, mark them up, come up with a selling price, and if that presumed selling price ideally is exceed in the VAT threshold, then meaning you will be considered to fall within the VAT class of being registration. A number of things to consider here is one is that there have been so many court decisions which have barred the URA from applying markups on the purchases made to derive selling prices. So I expect that as opposed to doing that, they'll rely heavily on third-party declarations. That means that when you sell to someone and they declare something in their purchases, or they also rely on what's coming under the if declaration. So there will be a number of practical things to look at when trying to put this in a perspective. Now, there's also one other thing to look at, which I think all of us would have seen in the media recently, that is the customs move towards banning groupage shipment of cargo. So what was groupage? Groupage means we are 4 suppliers, we are all shipping from China. We get one container owned by one person A, and that person ships for us in his name up to Uganda. And then once the consignment reaches Uganda, we remunerate that person based on the space taken up in the container. So because of that, the business community was saying that those people, the principal owners of the containers, were charging so much taxes as opposed to what the actual taxes would be paid by the individual owners of the consignments in the container. So that's basically a link to this amendment, because by banning the groupage, URA is now going to be able to understand and ascertain how much value is attached to everyone in the individual rights allocated as part of the shipment. So it's something which, like I said, on paper it looks very good, but in practice it may present a nightmare for the URA in terms of getting the practical tools for bringing this to life. The other key amendment, and I think some of us here would have been victim to this is to do with the stamp duty. So before the stamp duty amendment, which I'll talk about later, came in, we had an instrument under duty called agreements or agreement memoranda. So basically, that particular provision was very ambiguous. Why am I saying that? By not subjecting it to any specific business, any specific transaction, ideally that term would apply to anything that involves meeting of the minds. Currently, in the Stamp Duty Act, there is no description of the word amendment. So from a legal perspective, would always look at the Contracts Act, which provides a definition of agreement, which basically means anything that involves meeting of the minds and anything which involves exchanging promise for consideration. So even if today we are here and I, Stuart, for example, have agreed to come and do this representation for this group, and we agreed that okay, for this presentation, we shall remunerate you as follows. Ideally, that would make it an agreement, and the required party would have to complete stamp duty. Now, the amendments which has been passed by Parliament is to remove that particular provision of the Stamp Duty Act and make it nil. Now, stamp duty operates in a very interesting way because what it does provide for, there's a section that says that in case your instrument or your transaction can be classified in more than one section of the second schedule, it does mean that URA will go for the instrument that accords higher duty or higher taxes. Now, that is very, very important to think about because currently what the teams at URA have been doing, in case someone's transactions falls under agreements and any other provision of the Stamp Duty Act, they have been leaning towards the agreement because, like I said, the word agreement is all encompassing. Anything which amounts to an agreement or meeting of the minds basically will be taxed as per this provision. So currently, the rate has been 50,000 per agreement. So with the proposed change, it's now to be nil. And I've used the word proposed because from the legal perspective of amendments, nothing is set in stone up until the president has assented by way of signature. So as of now, we are assuming that the president will have assented and signed the bills or the final acts as Parliament approved. But as of now, we are assuming that there will be no change between what the Parliament has agreed and what the president signs. So this is a very it's a very important and welcome reprieve for the business sector because there's been so much challenge into interpreting what's an agreement, what isn't, in case you're having so many documents and you have one principal document, what amounts to the duty, what amounts to the agreement that will apply that will after that duty and all those final intricacies. So that's something to consider from the stamp duty perspective. Another key amendment, which I think some of us will have heard about, is the fact that the URA is now moving towards considering the NINs and the BRNs as the taxpayer identification number. Now, the number of countries around the world, even in Africa, that actually have already begun doing this. But I'll just talk about the practical applications, how it will work, and maybe as for businesses, what to prepare for, what that means for us. Now, currently, a person has been going to if say, for example, I've been employed at my new company and I have no TIN number, I've been required to apply for a TIN. And when I apply for a TIN, then the URL would be having sight of all my transactions, which I declare. Same thing for also a business. Now, by bringing in the aspect of making a NIN or making a business registration number as the approved taxpayer identification number, it does mean that even a child in high school who has gotten the name at that point in time, URA will have sight of that person's transactions. Now, one thing to consider is that from a tax perspective, there is no mandatory age below or above which someone should be to be a taxpayer. Okay, so even if, for example, someone is a beneficiary in a trust and they get income from a trust, they may be required to declare that income irrespective of how young or old they are. Now, what does that mean is that by having the NIN as your OBRN, as your taxpayer identification number, there will be kind of a synergy that's been developed between the NERA, which issues that for the individuals, between NERA, between URSB, between the Ministry of Lands, if you're having any transactions, and the URA. So the moment you get your name from NERA, you will realize that almost every major bank that they require you to have your name when you're registering for a bank account. Same thing goes for the passports, everything. A name is almost now a must for any Ugandan citizen. So by doing that, URA has more side of transactions that you are undertaking. I think some of us would have heard of the automatic window for having authorities around the world share information. So all that comes into play because even for businesses, what they are saying is that they also require to have BRNs, that the BRNs will be linked to the URA as their taxpayer numbers. And also if you're a foreign individual who is coming into Uganda, the URA will look at your TIN issued by your mother country as your TIN in Uganda. So it does mean that there's going to be a lot of information that the URA will have sight of, as opposed to before, when someone will go to URA and get a TIN mandated as at their own will. So like I said, if, for example, you're an SME or you're any general business, and say you have bought a piece of land, maybe you're going to set up your factory or anything like that. You bought a piece of land, you've signed an agreement with the seller, you take that to the URSB, the URSB will have sight of that. And by default, also the URA will have sight of that. So there's going to be a synergy of efforts for the different authorities, which will ultimately expand the taxpayer base, and keeping in mind that the government, like I said before, is looking at expanding the economy tenfold over the next 5 years. So that's something that's to look at, because economic expansion has to have a proportional increment with the taxpayer base. So that's also what we have to consider for this particular provision. Then again, another waiver or window for waiving interest and penalties has also been provided for in the recent amendments. So this is basically it's basically just an extension of what was already there before in the previous amendments, whereby we are saying that interest and penalties, which are applicable on any principal as at 30th June 2024, will be waived if the taxpayer is paying the same or has paid the same by 30th June 2026. So it's basically a window inviting people to voluntarily pay their taxes, as opposed to URA doing the audits. One of the reasons for this is that URA has registered, I would say, very, very good results when it comes to voluntary payments by taxpayers, as opposed to the cost that they will have to undertake when they do an audit. So it's just basically providing for it's just basically providing for windows for voluntary payments by taxpayers, as opposed to your doing audits, increasing their costs. And also they have seen that when taxpayers voluntarily declare, there is also kind of a small boost in taxpayer morale, because someone will be declaring what they want to see. Obviously, one thing also you have to consider is that voluntary declarations also is subject to the URA verifying what you've declared. So in as much as you would declare that I have this tax payable, the URA has a right to come and reassess or revisit or to revisit what you have declared to make sure that it's the correct tax payable. So all in all, those are some of the key amendments that SMEs should be looking out for and the practical implications. Obviously, there could be a number of things that you want to clarify. So please feel free to ask any question, and then we can have a discussion on the same. So back to you, Antonia. Thank you.
Thank you, Stuart. Thank you for clarifying many of those amendments. Any questions, anyone? You could unmute or you could type in the chat. I'll start with my own as you get started. Stuart, on the first one, on the exemption for the citizens, income tax for startups, that 500 million, is it at the point of registration, the capital that the business registers with, or is it cumulative over the 3-year period?
Yeah, so ideally now those are some of the final things that we have to look at, because when you look at the amendment, it says that investment capital. So investment is not something which happens in 1 year, 2 years, 3 years. So it may then have to be a fact that we consider the cumulative investment. But now, like I said, in practice, that may present a difficult challenge for you to track, because what then happens if someone meets that threshold after 5 years? Does it mean that the first 3 years when they're still investing, they don't qualify? So the number of things to consider. So what happened, what we've been doing because in the prior years, there were similar exemptions for businesses who are involved in particular sectors, and also they were capped to a particular investment. So what they will do, they'll always present business plans to the URS saying that, you see, I have this business, and in the next number of years, I'm projecting to invest this much in Uganda. And also they'll go further and also provide things such as their BOQs for projects and that kind of thing, so that the URA has sight of your future plan and how you're going to incorporate it. And what the URA will do, they'll respond by saying, if in case you exceed this investment threshold, then you'll qualify. So even in this particular aspect, I think the URA, when they're confirming these exemptions, they'll give blanket responses by saying, in case you exceed, you qualify. So that then it is left to the taxpayer to be the judge of their investment. If you're saying that if you're saying that you have exceeded the 500 million, sorry, that you haven't yet gone above the 500 million, but in practice you have gone above that threshold and you've still claimed the exemption, then meaning the URA will have the right to come and assess you. So I think in summary, there will be a number of practical things to consider in this thing. We just have to watch the space and see how the URA will look at putting it in practice. Yeah.
Thank you. Someone, Margaret was asking about the threshold for capital exemption, but you've mentioned it's 500 million with those caveats. And Hanifa is asking for clarification on waiver of interest and penalty.
Okay.
If we could just recap for her.
Okay. So, like I said, there is an amendment which is going to provide for waiver of interests and penalties on principal tax outstanding as at 30th June 24, if the principal tax is paid by 30th June of 2026. So what do I mean? In case you have any liability set on your ledger, for example, okay, And obviously, we know that unpaid liabilities on the ledger attract interest, okay? So all that interest that principal has accumulated as at 30th June 24, it will be waived if you pay the principal between 1st July 2025 and 30th June 2026. That's the first scenario. Second scenario is in case you have done a self-health check of your business, okay? And you found that actually you had tax to pay, or you had tax that was due as at 30th June 2024, okay? For example, in case you've done a 4-year health check, which goes back as far as 2018, 19, and what have you, and you found that actually in those periods that you declared less, but now you have to declare more. It does mean that when you make that health check and you amend your returns, if necessary, you will only be required to pay the principal tax on those on your amendment, as opposed to paying the principal tax and interest that will be applicable post 30th June 2024. So that's basically how the whole amendment will be operating.
Okay. Thank you. So the tax has to be paid, right?
Sorry?
The principal tax has to be paid. It's the interest
Yes.
and penalty that will be waived.
Yes, perfect. Yeah.
Okay. Thank you. Mr. Hamza Kagwa is asking, how protected are citizens from the data piracy and invasion through subjecting their NINs as TIN numbers? Is there protection of ownership and privacy of ownership of assets? Questions around the data privacy.
Data privacy, yes. So one thing to consider is that now, from a legal perspective, we have information that is deemed to be public information, and some which is deemed to be private information. Now, by default, when you get a NIN, you are disclosing to the government your details, biodata, and that kind of thing. Now, the URA in this case, when they're using your NIN as your identifier, they will not focus on they won't focus on where you stay, things such as where your parents, for them, they want to focus on revenue. That's the mandate. So the transactions which you're using your NIN for are the ones they're going to focus on. So things such as any other data that is not linked to the NIN, for example, so that is linked to the NIN, I don't expect that kind of information to be used by the URI for anything. Obviously, then that will take us to other legal frameworks, such as the laws around data privacy and that kind of thing. But I do believe when the legislators would have put this into play, they would have thought about all those implications and what will happen in case maybe someone tomorrow claim that by the URI having their name, URI is ideally coming in between their data and their privacy. So in short, the name will only be used to track the revenue information and nothing else. Maybe also I'll give an example. From a tax perspective, transactions between spouses for capital gains are exempt. Now, if someone is claiming that they have done a transaction with their spouse, the URA can now go and look at from your name, okay? Did you declare someone as your spouse or that kind of thing? Or if not, remember when you go to URSP and you're going to when you go to NERA and you're going to register your marriage, also they ask you for your names. So it's now a one-stop repository for URA confirming a number of allegations the taxpayers have been making from keyword revenue perspective, not things to do with their biodata and the kind of thing. Yeah.
Okay. So in a way, we already consented to provide some of that information, right?
So, yeah. But like I said, obviously, we do expect a number of we do expect some amount of pushback from the community. especially the legal community, we do expect some pushback on this because, like how the gentleman said, there could be an alleged privacy of data. Yeah.
Yeah. All right. Thank you, Stuart. Raymond Sechizivu is asking you to elaborate more on income tax when a business has been in existence for 1 year and has not yet grown to the capital threshold of what has just been amended. Does it fall under the 3-year income tax waiver?
Yeah, and I think this is in line with the question that I think also I think was asked to Antonia, which I think which also was asked by Antonia. Like I said, these are some of the practical things that we'll have to look at when businesses start applying for this exemption. Now, there's a number of things to look at. Does it mean that when someone is applying for a company or incorporating a company, they have to put 500 million as share capital on the memoranda and so what have you, or will we already consider the actual cash investment? From my experience, they'll look at the cash investment. Now, I did mention that investment is not a one-year thing; it happens over a period of time. Now, and I also mentioned that from my experience, what companies have been doing who qualify for similar exemptions, they normally give their business plans to URA, showing how they plan or how they propose to fund their expansion in the country. So in this case, like I said, it remains to be seen from a practical perspective how this will be put into play. One thing that I do think may happen. We did even find that in the next financial year, there could even be an amendment providing for partial exemption on that income, sorry, on that investment that you've made in those 3 years. So, like I said, there's a number of things to consider, but from a practical perspective, I must say that we have to wait for the URA and see what they recommend in terms of applying that particular exemption.
Okay. So we'll stay on the lookout for those procedural details. Okay. Patricia is asking, do I have to have an investment license to apply for this exemption? Does my business location matter, for example, industrial park or not?
Yeah, so for Patricia, the only cap or the only the two thresholds or the two caps for this particular investment is one, a citizen, and two, investment capital. So unlike the other prior exemption that were tagged to businesses operating in the industrial parks, this one doesn't have such caps. So it's just basically your capital, your capital stroke investment, and also if you are a citizen of the ESC. Yeah.
Okay, thank you. The next from Hanifa, I think it applies to the interest and penalty waiver. She's asking if one has to apply for the waiver or is it effected automatically once the principal tax is paid?
Yeah. So what basically happens, if I remember of the prior period when we had that wave operating, the payment system and the payment system and the ledger system were automatically configured that if someone is paying a principal tax within a period that the waiver applies to, they would show you how much interest and waiver interest and penalties you have, and it will be automatic. So it's not for applying URA. It's basically that will be configured in the payment module and the URA ledger module to waive the penalties and interest once the sum is paid.
And then Patience is asking, she's saying in their ledger, it's their business ledger with URA, they have, I think, an income tax credit, and they use it to clear liabilities of VAT and payee.
Okay. So that's a very good question, which I've seen many people asking on also on other forums. So you have to look at the source of that credit, okay? Now, there is two ways someone can get a credit. One is if you had the liability, say 100, and you had a payment of say 150, the balance of 50 becomes your credit. That's the first way of getting a credit. The second one is if you had zero tax payable and you made the payment of 100, okay, it means you have a tax credit of 100 shillings. Now, to use the credit from one tax to another, what the URA permits is transfer of the whole PRN. You cannot transfer a credit which has arisen from having a liability less than a PRN. That residual can be transferred, but you can transfer the PRN which is giving rise to the liability. So in case you have one PRN that is giving rise to a credit in one tax set, that can be transferred to another tax set. But you cannot transfer a credit that's coming from a residual difference between your tax and your payment. Yeah.
So in
I
a
don't
way,
know.
it has to be actual money, not
Yes, yeah,
a
yeah.
book
So
transaction, right?
yeah. So in case you have one PRN that's giving rise to that you can allocate that credit to one particular PRN. That PRN can be transferred. There's a module on your payment in your portal where that can be done. Yet if you go to the payments module, you will see one module talking about transfer of payment.
Okay.
Yeah.
All right. So last one before we wrap up, the issue of the stamp duty waivers. Does that apply to, does it also have a time limitation to it? Should it be for agreement from 1st of July, or does it apply retrospectively?
So the general principle in law, sorry, tax law, is that amendments only apply prospectively unless the particular amendment which has been brought about is saying that it's going to apply retro. So the answer to that is that it will only apply going forward. So prior, the agreement will still fall in that particular provision. Like I said, the only issue is that what amounts to an agreement is very ambiguous because there is no tag to any particular transaction. So that's the only issue that comes with it. Yeah.
Okay. All right. Emma, can withhold different, I think different financial year be used to clear income tax of another year?
Sorry?
Can withholding tax from a
Yeah.
different like fiscal year be used to clear income tax of another year?
Yeah, and maybe just before I answer that question, I think there is something I have to demystify. There is no tax called withholding tax. Withholding tax is just a mechanism that the tax authority used to collect advance tax. Okay? So for all intents and purposes, withholding tax is income tax. Okay? So yes, if you have a credit from another year, which is WHT, yes, you can use it to offset tax in your current year by virtue of a credit transfer on your ledger.
Okay.
Yeah.
Thank you. Someone is asking for your contact. I'm sure many would want to have it. So thank you, Stuart. You can type it in the chat. We have just a few minutes left. So your parting shot to the business owner. Of course, you've called out the taxes that are mentioned in the amendment, but there are so many others that where the status quo will be maintained. And what I'm hearing is that what's largely going to change is the vigilance of the tax authority to collect. So what advice do you have for the business owners? What do they need to do outside or including the amendments that you've pointed out to ensure that the businesses continue to thrive even in this new tax regime?
Okay, thank you, Antonia. So there are a number of things to consider. The first one, important, is as whether you are an SME, whether you're a multinational corporation, one thing you have to invest in is you have to have some aspect of tax knowledge, okay? Why am I saying that? Is we are seeing that the URA is becoming extremely busy, okay? And in being busy, the URA at times do things which have no legal basis, and at times they enforce on a company or taxpayers when the companies don't know their rights. So I think as a taxpayer or as a business individual owner and individual, you have to have some level of knowledge about the tax that you're paying. That's number one. Secondly, it's also very important to know that non-compliance of taxes is actually worse than it's actually worse than complying. So complying, there is a common theme that is a common joke among people in my field, whereby they say that the cost of non-compliance is way more than that of compliance. So you may think that that 1 million, 2 million you are paying on a monthly VAT is actually being a burden to you, but all the obligations which come with paying taxes come with rights. So that's one thing that you have to think about. So if you comply, you avoid so many things coming your way. For example, I think some of us have seen a number of businesses whereby they have been arrested, taken to court, all those things. So it may not only affect you as a person, but also it does impact your image. And as a growing business, image is very, very important, because image will market you to people who have never heard of it before. So I think one is to have knowledge about the tax that you're paying, be it through your consultant or be it through you as a person. Second is to try and ensure that you comply as much as possible. And thirdly, we have to consider the fact that the taxes that we pay fall under what we call a non-quid pro quo. Basically means that even if you pay taxes to government, government does not necessarily have to show the value for their money, though from an ethical standpoint, it's just right that government shows the value for their money. So there is I know in Uganda, one of the reasons for having low tax morale is the fact that people don't see value for their money, but that's not, that is beyond both our control. What's in your control is focusing on what your obligations are and meeting them on a timely manner. That's all I can say.
Stuart, so let's get ourselves educated. Too many resources on the URA portal. Enterprise Uganda does do a good job in bringing these discussions up. You can go to the Enterprise Uganda YouTube channel and seek guidance from the experts. Stuart is here today. You have his contact, so engage him after the call. So as we wrap up, someone is saying, how do I know the tax of something I want to import even before purchasing it?
Sorry, I didn't get that. I told you.
How do I know the tax of something I want to purchase to import even before purchasing it?
Okay, so there is a handbook called the Common External Tariff. The common external tariff basically provides for classification of everything that can be imported into the country. So in navigating that common external tariff, you have to know the code of that particular item. Ideally, that's another okay. It's another wider part of tax, which is customs. But ideally, the CET is basically a nomenclature providing for the customs codes for the different items that you can import into the country. And when you get the code, you can then find out the rate of that item that you're importing into the country.
Okay. So that information is available. You can talk to clearing agents. They would be able to share it with you. We'll see if we can find it and put it in the email that we got with the recording. Okay, so that's all the time that we had. I see there were so many other questions coming through, but can get to those at some other point. Thank you once again, Stuart. I'll honor the hard stop at the top of the hour. Thank you again for sharing this knowledge with us. It is very helpful, and as business owners, knowledge is power. So let's use this knowledge. It's just the tip of the iceberg. Let's get more interested in that aspect of our business, because like I said in the beginning, it can definitely break the business. And as Stuart has mentioned, there's a lot of, reputational risks as well. So let's get ahead of that particular risk. We'll be here again on Thursday for our next discussion. So please stay tuned for the topic, and wishing you a great rest of the day.
Thank you.